Is this time to start buying puts? Is this time to start taking profit on your long positions? I'm going to talk about why I believe in the next few days or the next coming week or so, we are going to see the market start to roll off and sell off faster than it went up. Now, I'm going to explain why I believe this, what my overall trade plan is. I'm going to talk about the risk to reward here, where I'm going to be trading, and the overall thought process behind this trade, putting it out there. I'm talking about it before it happens, what my goal is, what my overall trade plan is, and everything right here in this video. So stay tuned. All right, so I know it sounds insane to think that stocks might not just go up forever. It's hard to imagine. But I'm going to talk about why I am going to start buying puts on the SPY and on the QQs, on the triple Qs here real soon in the next few days or the next week or so. And I'm going to talk about why I think this, is headed in a downward direction here in the future. Now, one thing that I really want to point out here is just the other day, right? A huge sell-off in the market. You can see this candle. This is the 4-hour candle. We'll go to the 1-hour candle and check out this sell-off the other day from the 320s. We sold all night long. Just sell. Market gapping down big. Market taking a big hit. Now, why does this matter, right? It doesn't matter, right? We had a pullback. It's totally fine. This is normal. One thing that I want to relay here is this certain message that you can see how, we went up. But look at these moves up. During the day, during the market, pretty flat. Little move here. This is after the jobs number came out. Big push up into this area here. Bing. And getting stuck there at the 323s, 320 area. So after that move, it's just been a big waterfall ever since because of a couple of different reasons. Now, things are happening, obviously, around the world. There's more issues with the pandemic. People are thinking that, hey, maybe this might be time to take some profit after this massive move. Now, if we look at this chart, this is a big sell-off in March, pulled back, bounced back up here to the 320 area, crashed down here to 218, rallied back up to the 320 area. We gapped down there again to the 307s. Today actually bouncing pretty nicely there from the 297 area, just going straight back up. And I kind of expected that as well today because, after having 2 days of selling, having all this selling pressure for multiple days, we should have expected some type of bounce back. Now, what a key thing we're watching at this point really is like that. I feel like the 320 area is obviously going to be the big kind of deciding factor here if this is going to find resistance between 310 and the 320 area. And basically for me, I'm going to try to load up on $290 to $300 SPY puts, and I would love perfect case scenario here. Perfect scenario for me is that the market pushes back up here to the 320 area one more time. We get stuck there, and then we roll off, which would just be delightful because we would basically confirm that we'd have issues there. The 320 area, push back up to the 320s. The puts for those 290 puts are going to get really cheap. They're already trading at like $2 right now. So the 290 puts, 295 puts, pretty much anything between 290 and 300, I think is where I want to be with the SPY because, again, we do have this gap in the chart at the 290 area, and that would put us down here 286. After 286, we can see that 270 area being support. So all I need to do for these puts is to get below 290, and I'm chilling. And as I said here, we have that gap in the chart, get the pullback below 290. Best case scenario, we push back up here. We fill this gap here at the 320 area. We fill that gap. Let me hit that 320 one more time because those puts are going to get really cheap. Those 290 puts for probably like July expiration are going to get really, really cheap at that point, and that's when I want to really hammer it and buy. My overall plan for this trade, again, here, like I said, I'm looking to buy the 290 puts, looking to buy pretty much 290 to 300. I'm totally fine. I'll take the 300 puts as well, depending on how cheap they get and how much we push. If we push to the 320 area, those 290 puts are going to get really, really cheap, and that's where I want to be buying them at. Up 290 puts right now. See where they're selling at. This is for June 26th. If we look out a little bit further, we'll say like July 1st for those 290 puts. That would put us, okay, $3, 18, 316, 376. So really, between 290, 295, I'm totally fine with buying those puts in that area. Like I said, if this continues to push higher up there to the 320s, that's going to be best case scenario because these puts are going to get really, really cheap at that point. So I'm looking for July, maybe June 29th area. That'll put us, 260s, 360 area. If I can get the July puts for a little bit cheaper, or, depending on the price, like if the July puts are really close in price to the June 29th puts, then obviously I'll buy the July puts for me. That'll make more sense. You probably are saying, why would you want to fight the Fed, Patrick? You've already learned that the stocks don't go down. They only go up. Well, this was news today. This came out at 2 p.m., actually. That's what really pushed the market higher at this point. The Fed says it's going to start buying individual corporate bonds. Now, if the market was really booming, like they were booming, if the market really was amazing and everything was great, why is it that we keep getting news and we keep getting all this information about how the Fed's buying, this is happening, and, these things are going on? Why is it that these things keep coming out in the news when, the economy's booming, everyone's getting back to work? Why should we be worried about a recession? Everything's great. Well, like I said, there's something going on here. And today, seeing that news about the Fed saying they're going to keep buying corporate bonds, I don't know, guys. It's just something deep inside of me, something deep in my soul is telling me that it might be time to start looking for opportunities to the downside here. And I think, I'm not being a full-on doomsday prepper by any means. I'm not sitting here going, hey, I'm gonna buy the 180 puts. It's not what I'm doing here. That's not my goal. My goal is to look for an opportunity here. I think the $290, $300 puts makes total sense. Really makes total sense for me. So that's what I'm watching, and that's why I think there's opportunity there. And you can see as well, if you look here at the calls, look at this for the calls. Look how cheap the calls are right now for the June 29th, 320 calls. They're only 90 cents. So there's a lot more people sitting over here thinking that we're going to go down in the market. And there's a lot more people not really doing much over here on the call side. So, again, something to think about, something to think about here. Also, one thing I like to think about here is that the last time that, when I traded Bitcoin, when I was in the whole Bitcoin cryptocurrency stuff back in 2017, everyone started talking about how easy, it was amazing. Like everybody could just make money trading Bitcoin, right? It was like Bitcoin just kept going higher and higher and everyone could get rich. And that's the story that we're hearing today. That's what CNBC is pushing. That's what everyone's talking about. It's all over. It's like, hey, the Robinhooders can't lose, right? The Robinhooders can't lose because they just keep making money because stocks just keep going higher. And it's one thing that I've learned, right? One thing that I've learned in the last 4 or 5 years of doing this, the YouTube, all that stuff, is that big money, smart money, the big money guys, the big money guys, they don't lose. They know what they're doing. They can move the market in the direction they want it to move. And I think a lot of this is really from the Fed. Obviously, the Fed buying and pushing it higher, supporting the market overnight. But really, what's going on underlying? What is going on with the economy? And it just makes sense. I know a lot of people were expecting, that 300 area to be our resistance. But again, looking at the chart here, let's look at the chart. If you look at the chart here, a lot of people were expecting that $300 area to be resistance. We had some resistance here at the 310. And guess what? We popped above it. What's one thing that I know that you know? What happens with stop losses, with resistance, support areas, things like that? 99% of the time, those areas not only get tested, But a lot of times you get these fake outs. You get these fake outs below resistance, above resistance, support areas. You get these fake outs, and what do? They end up scaring you out of the trade, and that happens constantly. How many times, and I'm not talking about, on the daily chart. I'm talking about on the minute, the hourly, whatever chart you're trading on. How many times has this happened to you, right? This has happened to you so many times. So the same idea that the market is going to, do these kind of whipsaw moves above and beyond those support resistance areas, it makes a lot of sense. Because if we're looking at the daily chart is no different than looking at the 5-minute, the 10-minute, the 20-minute, whatever chart you're looking at. The daily chart is still the simple idea of resistance, support, having candles, things like that. And again, you can see, we got stuck there at the 320 area. Guess what? We dropped like a rock. We went from 320 down there to 300 like it wasn't even, like there was no floor. There was no floor, right? We dropped from 320 to 300 like that. And why did that happen? First off, because everybody that was buy here at the top, buy, they're the first ones to sell. So now, again, we're always going to have these reactions, overreactions. The market's going to move. It's going to get bounced back. But that does not, having a green day today does not validate the idea that, hey, we're going to just keep rallying back to all-time highs. So that's why I'm really kind of watching this gap here on the chart. I want to see maybe get filled. We'll get a push up into the 320 area. I'll take that. And then at that point, I'll look for my puts. I'm going to look to buy puts in the $290 to $300 area, for the puts. I like to really, the cheaper I can get them, the better. I don't really care at this point. So really watching the SPY, also watching the QQ here with the tech stocks. Again, really performing a lot better. The overall recovery has been a lot stronger, a lot more dramatic in the NASDAQ with the tech stocks. But, again, look at that drop. We went from 247 down there to 232 like nothing. We just dropped like a rock. So we really got to ask ourselves, is this a bullish market? Is this good news that the Fed says they're going to keep buying corporate bonds? What is this telling me other than the idea of like, hey, stocks never go down, they only go up? But really, if we're asking ourselves, is the economy doing better now than it was 3 months ago? Why is it that the Fed is now saying they're going to keep buying corporate bonds? At some point here, the Fed just can't stop everybody from selling. So the Fed can buy, but at the end of the day, if the Robin Hooders get scared, if the Robin Hooders want to sell their stocks for profit after buying, down here, if they want to sell, they're going to sell. So the quicker this thing starts to move, the quicker the selling's going to happen, the quicker the overall, dip's going to happen. Again, like anything in life, there's always a risk to reward with this trade. I'm looking to buy a discount. I'm looking to buy a good price, risk reward wise, to buy those puts for July, maybe late June, probably more in July, but looking to buy those puts at the 290 area. I'm probably going to risk $2,000 on this trade. I'm going to put $2,000 into the puts. Once I load up on the puts, I'm going to be watching that 323 area. If we can't hold below 323, if we push, then obviously the trade is invalidated. It's at that point, hey, whatever, we're going to go higher, and then I'll look to start buying calls that are above all-time highs. That's just how it's going to have to happen. I'm going to risk here off the 320 area. I'm going to look to buy these puts in this area with my stop, my overall plan, my trade stop, right above that 320 area, 323, whatever. There at the 323 area, risking off there for, I don't want to say it, but a possible big move to the downside here. We're looking at, like I said, that 290 area. Let's get this gap fill there. If we get the gap fill, we got 286. Take a little bit of profit, probably there in the 290 area. And then maybe buy some further outputs for down here, 220, 240 areas. So that's what I'm looking at. That's my game plan. Like I said, maybe the market just keeps going higher and higher forever, but I'm going to risk some money here. I'm going to put $2,000 betting that the market is going to pull back and continue to sell off from here. So that's the game plan. I'm putting it out there now. Today it's June 15th. Tomorrow is June 16th. This week, I'm basically looking to keep buying those puts in that area for a possible move to the downside. Again, I really do like this trade idea because why? Because everybody was like, okay, this is going to be the top here, $300 area. This is going to be our resistance. I even thought that as well, right? I thought that, okay, this is probably going to be our resistance area there at the $390, $290, $300 area. And guess what? The market went to $320. And we know, that's how it happens. We know if we're trading, penny stocks and we're watching a 5-minute chart and we see how there's resistance, and we're like, okay, we're going to short. We get short there at the 290. It pulls back a little bit, and then it rallies against us. And then guess what? An hour later, the same day, it's down here at the 250 area. I'm not saying, right with the SPY, but if, we're trading penny stocks or whatever, that's the same idea. When penny stocks move, the way they move up, down, they break through those resistance, they break through the support, they move, on a 5-minute chart, just like how the market moves on a bigger, daily chart. Obviously, these moves are going to take longer, and, there might be some pain. This buying these puts in this area, there might be some days of red. I might lose a little bit of money I'm not that I'm going to lose it, but I might be red for a little bit. As long as we stay below 323, the trade is validated. And above that, well, like I said, I'll be wrong. But hey, that's the best part about having a YouTube channel, is I can put out videos on YouTube saying, hey, look, this is what I'm going to do. This is my plan. And so I'm going to, this is what I'm doing. I'm putting it out there today, and we'll come back and we'll talk about it in a week from now, and we'll know what's going to happen from there. So if you guys haven't already, do me one big favor, hit the like button, the subscribe button, all the buttons down below. I will talk to you guys later on.